Hello? Yeah. Oh yeah. Oh yeah. We are 100% ready. All right, great. All right, I'll see you soon. All right, peace. Sorry about that, everybody. That was the prophets calling, so I had to pick up. All right, so welcome back to the channel. Once again, it's your boy Huey, and I trade stocks and options every single day, even on weekends. And in today's video, we're going to briefly discuss support and resistance, how we use them to identify where we can find good entries into a trade, and also find potential exits or scale out points, and help us understand how to read charts a little bit better. If you want to learn how to trade options or really understand what you're looking at when you see charts, then this is very, very crucial. So jump in and we'll see you on the other side. Peace.
All right, so in this video, I want to talk about support and resistance. This is again fundamental to trading, to understanding charts. Before even trading, to understanding charts, you need to know about support and resistance. Support and resistance are levels where you can expect for a price to react in a way that it has in the past, right? So you can't just come up with support and resistance arbitrarily. Like, you need to have certain pieces of information in order to draw your supports and resistance levels. So all right, let's start with support, and we will kind of do all the fundamentals with drawing support on this chart. This is CCJ. So CCJ's chart has decent levels of support and resistance. So when I draw my support and resistance, I'm going to go ahead and click price level tool in Thinkorswim. If you're on TradingView or Webull or even Robinhood online on their website, or the maybe even the Yahoo Finance app that has some drawing tools, you can go ahead and use a price level or horizontal line. And so right now we're going to talk about horizontals. Now, when I'm drawing my support and my levels, I usually just start from the left and work my way over to the right. As a quick crash course refresher, on the bottom, on the x-axis, we have the time, right? So as we go from left to right, time moves on, and on the y-axis, from bottom to top, we got price. As as the price goes up here, it goes up here, right? So up and down in price. So we know that green candles are up and red candles are down, right? We know that based on the last video that you watched on my channel. So I like to leave my cursor on the left hand side and just kind of scan my eyes across the screen, right, to see how many touches I can get on this one area where my cursor is. So there's a few touches here, so I'm going to go ahead and click and double click and add a price level there. Now you can see that level is what is this, 1564 ish, right? What I'm looking for is, I'm not looking for exact to the very T where the bottom of this wick ends. I'm not looking for that, because this wick is a reaction. This wick is where buyers stepped in. So this is an area where buyers tend to step in. So this line of support that I drew it here because I saw multiple touches, whether by wicks or bodies, at this level. Now, we want to look for finishing patterns. So not like in the middle of a bunch of bodies, but we want to see like price either opens here or kind of tested it, such as it did here, or and more importantly, we want to see that price kind of left this line the way that it did on this big move, and then came back to the line to test it. Now, as you know, a line is derived of 2 points. You take point A and point B, and you connect them, and that forms a line, right? So when I was looking at this at first, I'm like, all right, this is my point A right here, this very first green candlestick on the 24th of February of last year. And then the next point was the 26th of February of last year, just 2 days later. Now, again, it wasn't a perfect shot, but I have my point A and point B forming a line, and I just look across my screen to kind of see how many times it touched this line. Since there was multiple touches, I'm going to draw my line there, right? Now I'm going to keep working my way across. I like to do pivots too, like we're kind of the change in direction. So right now we can see that we went up on this green candle and we came back down. So this would be considered a pivot. So now I'm just going to keep my cursor here and kind of look across the screen and see that there's a bunch of touches occurring kind of around this area. So I looked here, right? I looked at the pivot, and then I kind of saw a touch here on this red candle. I saw this interaction between these two candles here. I saw the break of this line and then kind of a bunch of wicks forming along this line from the top. Then you kind of look across and you can see all the times that it's interacted. The most important one was this one here. This one here. Now, the reason why I call this the most important one is because let's look at the first example. Price started here, tested it again, broke through it, but then moved off of it, came back and tested this level again, and then moved, came back and tested this level again. So that's 5 touches already. 5 touches between the time that we drew it and now. 5 touches, all proving that this is an area where price likes to touch, price likes to return to, and buyers like to step in and bring the price up, right? So this is a level of support. Think about it like this. You're trying to make moves. You are trying to better yourself. You're trying to start a business. You're trying to start a brand. You're trying to open a venue, whatever the case is. And you tell your people, you tell your friends, and you tell your family, and you give them the idea, and they support you and they lift you up, right? They uplift you and say, yeah, you could do it. You got it. Any resources you need, I got you. Anything I could do to help you, I will, right? So similar to that, price, when it reaches support, it gets lifted up. So every time the price has reached this line, it gets lifted up. It gets held up by its support system, per se, right? Just think about it like that. I know it's very rudimentary about it, but that's how it makes sense in my mind. I get lifted up by my support system, and so does price, right? So I'm just looking for areas where kind of we get a reaction. Now, on this one, price was pushed down as opposed to being lifted up. So now we're delving a little bit into the resistance territory. So obviously we mentioned support as it touched a bunch of times and it kind of bounced up above from this level and got lifted up, 5 or 6, 7 times. But the very first line, the second line that I drew was on this candlestick where it got pushed down. So think of this as, conceptually, think of you trying to break through that glass ceiling, for example, right? Let's say you're the first Black woman system administrator in your company, and you're trying to break through that ceiling and break those barriers. Resistance is kind of like, the establishment is trying to make sure you don't make it through that, right? Or let's say you're the first one in your family to go to college, and some of the people in the neighborhood are talking shit because they don't want you to make it, right? Or let's say that your parents have been supporting you and they don't think you could do it on your own, and you try to go out and do it on your own, right? You're an artist and you want to prove to them that you can make it happen with your art, right? But they're talking shit. They're saying, nah, you're not gonna make it. You should get a real job. They're resisting your movement. They're kind of pushing you down and bringing you down, right? So that's how resistance is. Resistance is the opposite of support. So your support system lifts you up, but the resistance tries to keep you down. So that's what happened here. Now, I drew it here on this line, and this is my point A, and then I'm looking at this kind of where this level was, where we kind of, we tested up above, but sellers stepped in and brought the price back down below this line. So this became my point B. And that's obviously point A and B, you get a straight line and then you draw straight through that line. You get pushed down here, you get this interaction here, but then something strange happens over here. So this was a previous resistance, right? And obviously price can't get above this level. But over here on this day, right before it had earnings, which is a strong catalyst, we had a big move in CCJ. CCJ actually put in a $1.77 move, which is quite a big move for CCJ. And it broke through that glass ceiling. It broke through the resistance. And it opened way below here at $17 and it closed at $18.50. So it had some sellers, some people trying to hold it down, but it was strong. The support system was very strong and it moved and it made a big move. Now on the next day, resting day inside bar, but on this day, price opened up at this level here at $18.39, and I'm just looking up here. If you look at me, you see me glancing up at the top of your screen. I'm just looking up here where price is. You have the day, the open, high, low, close, and the range. On this day, it opened up as high as $18.39, formed a red candle, and came down to test the low of $17.73. Now that $17.73 is much lower than our $18.02 level, previous resistance level that we drew. It tested it, and buyers stepped up and brought the price back up. It did it 1, 2, and even I would count this day, although we didn't get a touch, but I would count it 3, 4. Where this previous resistance, where we were held down before, now is acting as your support system. You proved to them what they thought was impossible, and now they're going to support you because that's how it is. So anyway, so resistance becomes support. That's why when you see me refer to these things, I'll usually refer to them as just levels, whether they're support levels or resistance levels. I just like to refer to them as levels because sometimes your resistance becomes your support, right? Sometimes it becomes your support, and sometimes your support will become future resistance. So they kind of interchange all the time. So that's why I just call them levels. One more thing that I want to mention about these levels is, and why specifically on this day where the low of the day was 1809, which is higher than our line of 1802 by 7 cents. I counted this as a day of support because on this day it approached the line. On this day it approached our white line, right? It didn't cross through like it did on these 3 days, on this day, and this day, but it approached the white line. And so that's an expected reaction because on this day, buyers saw that they like this level. They want to buy it here. On this day, buyers like it at this level. So on this day, whoever was selling it noticed that this is a very tough level based on the past 2 days. The price is not going to go under, and so they just stopped selling it. They said, you know what? I'm not even going to wait till it hits that line. I'm just going to take my profit, get out the trade, and let it do whatever. Right, so this is where the sellers kind of stopped. They didn't even let it touch the line. The next day, obviously, it came and tested that line and gapped, right? Big move. Sometimes it doesn't have to touch the line. It's an expected reaction. Like, for example, when your stove is on, you see that the stove is on, and you see that there's a flame, so you know not to touch the stove. But if you do want to test it, you put your hand pretty close to the stove, and when you get close to the stove, you'll feel that heat from the stove. Without having to touch it, you feel the heat. You don't have to get burned. You can feel the heat, and you'll know, hey, let me pull back. And that's kind of what happened here. You feel the heat with these lines. So these lines don't have to be perfect, and I wouldn't draw them perfectly. Some people usually draw them on the body themselves or on the wicks themselves, but I think that you miss some of the move when you do that. So that's why I don't like to do that, right? So consider that. When you draw, it doesn't have to be perfect. Just know that this is a level of interest where either buyers are going to step in or sellers are going to step in based on what is done in the past. A level, if you're approaching a level from the bottom, then it might become a resistance level, right? But if you're approaching level from the top, then it might become a support level. So just keep that in mind. And some days it might do nothing. I mean, it depends. I'm going to continue on my journey from left to right. Let's see. I'm going to go to this pivot. I see a bunch of stuff here, but it's not the cleanest, so I'm not going to include it. Obviously, we came back down to this level. Let me go to this pivot. I'm looking across my screen. Yeah, I mean, this is a decent example. So I'm just going to double click my price level tool. Actually, let me switch it up real quick. I'm going to draw a trend line using my point A, which is this area here, point A, and then I'll leave this one as my point B, right? But I'm going to, let's see, yeah, so I'll just click it, right? So I have my point A and my point B. Let me change the color of this so that it's clear. I'm gonna make it yellow to illustrate this example. So we have the point A here and the point B. I drew a line between, I connected the 2 points to form this line, right? Now I'm gonna right click it and I'm gonna extend it to the right. So I have my point A and my point B. I made it a full line, extended it all the way to the right. I wanted to differentiate this between the price level, right? Because that's how you're supposed to really draw a point A, point B, extend the line. Now, I see that resistance as of these 3 days, and even on this day, but then it kind of gapped above it, came down, gapped above it, and then we got a retest on these days from the upside now. So now it's support. Previous resistance becomes support, right? And that always happens. That's why I call them levels. So we had the previous resistance, worked as support, went up, made some highs, came back down, tested support, made some highs, came back down, tested support, fell underneath it, tested it as resistance, came down, tested it again as resistance, even though it didn't touch, but it approached the level and people got wind and they said, yo, let's get out of the trade. And they did. And it came back down to a previous support, which is very strong support now because it's tested it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times. And, so the more that these things get tested, the stronger they are, right? The more that these things get tested, the more valid they are, is what I should say. And I'll explain why in a couple of minutes. So now, just moving across, I'm going to just finish this off with some support and resistance. Let me just blow through this pretty quickly. I have something very easy. I have something here. Let's see. I have something here. Okay, I think that's good, guys. I think that's good. So let's do one here. So again, your rules are when you're drawing the horizontal levels of support and resistance, you just want to start from left to right, follow the price, and look across the screen as you're drawing. If you start here, if you start over here, then you have to kind of backtrack to see how many times it touched, and that's kind of a waste of time. That's why I like to start from left to right. Also, that's a little bit of overkill because the price isn't currently at $15 and the price isn't currently at $28. The price is currently over here at $22, so I don't have to go up to 25 or down to 18 because price isn't going to be 25 and 18 tomorrow, right? The reason I say that is because CCJ is one of the tickers that I'm looking at today, along with another 30 tickers that I have to look at tonight before tomorrow's trading session. So I'm not going to waste time trying to chart levels that are way down here at $18, at $15, because CCJ is not going to be $15 tomorrow. It might be $24, right? It might be $20, but it's not going to be $15. So you can save that extra second of time by not doing some of these. You can kind of just surround yourself at where the current price is, the last candlestick, add a little bit above and a little bit below, and keep it like that, because you got to go through 100 charts so you can get ready for tomorrow's trading day. So I drew a bunch of levels here, support and resistance levels. And so that's that. So the point here, just to reiterate it before we move on to the next section, is obviously a line is when you connect points A and B, you got a line. When I like to draw from left to right, look across the screen, look for multiple touches. And so I like to draw where there's multiple touches. I like to draw where there's pivots, because some of these pivots show that there's a change in trend or some traffic ahead. And that's pretty much it. Support becomes resistance. And that's pretty much it. So let me clear my drawing set. Boom. Boom. Okay, so that's horizontal levels of support and resistance. Now, there's horizontal levels. There are no vertical levels. Let's say I draw a level here, a resistance. Here's my resistance, right? Here. Just because I drew a resistance here doesn't mean it's always going to be resistance, and doesn't mean that price will even respect it. Some days you get ignored like this, right? Some days you get ignored. So just keep that in mind. It doesn't have to be perfect. It doesn't have to be on the wick perfectly like that, or on the body perfectly like that. Like it doesn't have to. So don't strive for perfection here. Strive for progress, and you won't make progress trying to find perfection. So that's that. The next thing I want to talk about is, and we'll move into a more current section, is falling resistances and rising supports, right? So what that basically is we've identified the uptrends and downtrends in the last video, and if you haven't, then check that video out. But just to quickly reiterate it, you get lower lows and lower highs in a downtrend, and you get higher highs and higher lows in an uptrend, right? So right now we have highs, lows, lower highs, lower lows, lower highs, lower lows, right? To signify a clear downtrend, right? To signify a clear downtrend. I'm going to draw a channel around this so it's very, very clear. So it's going to be kind of ugly, so bear with me. We kind of got this kind of going on, right? Where it's just, price is just falling, right? Now, maybe we should look at a different stock. Let's look at a different stock. Let's do Facebook. I haven't seen Facebook in a while. Okay, so this is a pretty good example. All right, so here's Facebook. Facebook is forming lower highs and lower lows, as you can tell, right? It has that same kind of zigzag pattern, but it's going lower and lower and lower. Now, let's look at a smaller time frame. Let's go to 30 minute. So here's 30 minute, and what we do, the same exact thing that we do when we're drawing horizontal levels of support and resistance. We find 2 points. So this whole area will be my point A, and this green candle where we kind of fell after this candle will be my point B. So I'm gonna click on point A. I'm gonna draw it through point B, and I'm just gonna extend my mouse, but I'm still staring at this level right here. I'm still staring here as I extend it, and I'm looking for multiple touches. There's a couple of touches on this, right? So, and let me just change the color on this so it's very clear. This is a very good example, so I'm happy that I got it in one shot instead of wasting my time, wasting your time looking through the market. Whether I would have wasted your time, you could have just fast forwarded through the video. So, all right, so lower highs and lower lows, right? We got the downtrend, and now every time that Facebook comes up to this line, right? A line that I drew from point A, I'll circle it. every time that Facebook comes up to this line, and this is a 30-minute time frame, so every candlestick is 30 minutes. So every time that Facebook approaches this line, it seems to reject and fall in price every single time in the past, right? We have this time, this kind of counts, this definitely counts, this definitely counts, right? Even here, a bunch of sellers came and just took control over here. So this is what's considered a falling resistance line, or a downtrend resistance. It depends on, however it makes sense to you. I usually call them falling resistances because I feel like they're easy to conceptualize. Now, and maybe an even better example. Let's do this. Boom! It rejected there, rejected there, rejected there, rejected there. Right, rejected there, rejected there. And then you can just kind of take all of these areas where it kind of rejected and draw a line straight through them. But you see where this falling resistance line is, right? The resistance just kept getting lower and lower and lower, forming this downtrend. I'm happy that I did this because I want to address one thing. I think it's very important to know that you should expect for these things to get invalidated. Right? Let's just say we got our resistance line here. We have multiple touches, right? We got this touch, we got this touch, and this touch, and we got the breakout, right? So what you're looking for, how can you take action on this? When you see that price is approaching this level, you expect that it's going to do the same thing that it's done in the past, right? You can expect that it's going to get to the level and then come down, as it has a bunch of times. Over here, it kind of did. Here it approached it and came down. On this day, it approached it and came down, but it started kind of looking like it's going to go up in price because the price is kind of progressively getting higher. Even as it's approaching this line, it's still kind of getting higher. And on this day, it kind of broke through it. On this day, it came back down to test the line. It always goes back to test it, right? Support and resistance. And then it fully broke the trend. We have these lower lows and lower highs and lower lows. And now we have higher highs and higher lows into a downtrend resistance line, and then now this high is higher than this high, right? The low that it forms might be definitely higher than this low, and might be higher than, for example, this low. So potential change in trend. That's why we like to draw these kind of falling resistance lines. Especially in downtrends, once you get the break, then you know there's a reversal. You can take action right on the break. Depending on your risk tolerance, you can take it either here on this candlestick at the break, you can take it on this candlestick at the retest, or you can take it on this candlestick at the confirmation of the move. Let's look for another. I want to see, this is a falling resistance. I want to see a rising support. Tesla. Here we go. Tesla I had a touch here on this day where it closed. And then I had a bunch of other touches, right? I had a touch here where it closed, a touch where it opened, it came down below, and then buyers stepped in and brought it up. It came back and it touched this level and stopped the downside move and reversed and went back up and really just bounced. Now, I can make two good points here. So thank you, Tesla. Thank you, Elon Musk. So we have our higher lows, rising support line that immediately got invalidated on the third time. The third time that it touched it, it got invalidated. So going to our earlier example with CCJ, I mentioned that the more times that something kind of touches, the more valid it becomes, right? So if you look at my cursor, all the times that CCJs come back to touch this level, shows that it's a very valid support. And you can expect that people are going to buy it at this time. And the more that they buy it, the more that you can expect that they're going to buy it, right? But that doesn't mean immediately once it touches it, buy. That means wait for some sort of buying pressure on a candlestick and a reversal pattern to form and some confirmation. You just think about, hey, buyers like it at this level. Let's see if they still like it at this level. That's how you gotta think about it. Now, Tesla's a good example because buyers liked it at this level. And as the price is rising and it's a little bit of an uptrend, they still like it at kind of this level. And this is my B, so AB makes a line. And then the next time it came back to this level, if you would have immediately assumed that buyers are going to like it, so let me just buy right here, you would have got killed on this downside move, right? So the more taps that the level gets, the more valid it becomes, but the more taps that a level can get, the weaker it can become. And the reason why I say that is because let's say there's a level, like for example, this is a really good level right here. This is a good example right here. Boom. I have this line where it's acting as a very strong resistance. Price has been around this line for a bunch and hasn't been able to really strongly break it and stay above it. You know, it broke it, but it didn't stay above it here, and it hasn't been able to do it. So the more times, so that means that there's a bunch of sellers in this area. That shows me that whenever I get to this area, I can expect that people are going to sell Tesla, and Tesla's price is going to go down, right? This area. Whenever I get to this area, the price is going to come back down, right? The more, so let's say there's a million sell orders automatically inside of the stock market matrix. There's a million sell orders just chilling right here, and every time the price gets to this level, these sell orders get eaten up a little bit, right? They immediately fill and they sell, right? And so every time that it touches, 100,000 sell orders get filled, right? On this one, 500,000 sell orders got filled, and they keep getting filled, and at some point, all these sell orders are going to get filled. All of them will be filled at some point because it keeps coming back to this level. So as sell orders get filled, this level gets weaker and weaker and weaker and weaker and weaker and weaker and weaker until it disappears, and the next time that it comes back to it, it might break to the upside, right? That's kind of what happened here. There were some buy orders here that got filled. As you can see, the thing went up. Again, it got filled, the thing went up. And the last time that it kind of got to this level, this rising level of support, all the orders were already filled, so now there were only sellers bringing the price down. So that is horizontal levels of support and resistance, right? And then we got these kind of diagonal rising supports and falling resistances. So yeah, that's it, guys. Thank you for watching this video. If you haven't checked out the candlestick video, go ahead and check that out. GoldRushGang.net. You can try us out for 1 week for free. Follow us on social media at Gold Rush Academy. All right. Peace.